Welcome to A Canadian Investing in the U.S., a podcast and YouTube channel focused on Canadians buying real estate with host Glen Sutherland.
Welcome to a new episode of A Canadian Investing in the U.S. with Glen Sutherland. This week, my guest is, a repeat guest is Kris McEvoy. Kris, you want to give everybody a quick introduction to yourself and we'll jump into it.
Yeah, so my name's Kris McEvoy. I'm a CPA. My office is in Fonthill, Ontario. We specialize in cross-border accounting. We do a fair bit of international tax work, but the vast majority is Canada, US, just for obvious reasons. And our favorite client type is actually Canadians investing in US real estate. So we really are the experts on that area, and we're here to help.
Love it. So one of these questions that came up, I think it actually originally came up from one of my students, but there's a lot of ways to move money around inside of your different entities. Like a lot of times if you're talking to Kris or you're talking to Ali or whoever for setting up your structure and a different attorney or whatever. But a lot of times we're building a tiered structure and there's different parts to it. Sometimes we're loaning money to ourselves. Sometimes we're just moving money. We sell a house, we buy a house. And I just wanted to have a conversation with you about the correct way to do this, because I hear about people doing all kinds of things, and that it might be fine, but it might get them into a sticky situation at some point.
Yeah, this is a great question. And honestly, this is probably one of my most commonly asked things when I do consults with people once they kind of get into it a little bit. Mm-hmm. So quite commonly, you'll have a structure that includes, let's say, a limited partnership, a general partner of that partnership, which oftentimes is its own C corporation, right? Sometimes that confuses people right off the hop because they think, well, it's just me. Who am I partners with, right? And the answer is essentially you're partners with yourself wearing a different hat. So you're going to have your limited partnership, which has two types of partners: limited partners, which means their liability is limited, and then a general partner. And then your individual properties are likely going to be one step below that in LLCs. And that's, again, more of a risk siloing question. But like you said, with all these entities, then the question comes, well, what do I do from where? So I'll give this in two or three parts. So the LLC, ideally, is just holding title and that's it. So you really wouldn't be transacting out of there normally. Now, if you have a block or co-structure, it's possible to do that. If you don't have a block or co-structure, CRA has some issues with the idea of LLC flow-through, which still applies to if it's being held through a limited partnership. So typically, if you have sort of an LP, GP, LLC type structure only, then we're saying avoid economic activity in that LLC. If you have a blocker company, which is a holding company at the top, then that might be okay. But just to go with the first example, typically it would be no economic activity out of the LLC. Then the simple way to think about that general partner is it's the one with all the liability. The limited partnership is a little bit like a holding company, and it should mostly be holding safe stuff and not conducting business. So when you're going around conducting business, you're signing off as the president of that corporation, which is the general partner. And so it's sort of like a mini property manager is an easy way to think about it. Is, you're going to have it collect the rent, you're going to have it pay the mortgage, you're going to have it pay the bills. And then if there's extra profit, the extra profit's going to get transferred over to your limited partnership.
Are you looking to invest in the US? Are you looking for a coach that has been doing this for much more than 1 year? In fact, doing this for almost 10 years? Do you want to do one-on-one calls? Do you want to actually have someone looking at your deals and actually thinking and worrying about your projects? If that's of interest to you, I'd love to get on a phone call with you. Go to glensutherland.com or at CanadianInvestingInTheUSA.com and schedule a call. We'll just do a quick 15 minutes to see if it works for you.
Now, at times, banks will require you to make payment on a mortgage from a certain account or a certain account owned by a company. This is one of those examples where it might not be possible to do it exactly perfect. So if the bank is forcing you to do it a certain way, you're probably going to have to do that, but at least sort of know what the general rules are and then make the exceptions if you have to, kind of thing. In terms of how the money gets down there in the first place, people are often asking two questions. Logistically, it's probably a wire transfer, and you could actually be using the service of one of the guests you've had on before, like Knightsbridge, for example, to actually get a better deal on converting your money on sending it down. Typically, that C corporation is acting as an agent. So, for instance, if you sent the money to your limited partnership, that wouldn't be wrong. But in keeping with the spirit of the general partner being the active partner, as opposed to limited partners are usually more passive, the more you can have that general partner do, the better, because that way you're making it look like a duck and quack like a duck, so to speak, right? Because it's saying it's the general partner, it's saying it's running things, well, then it should be running things, right? As opposed to, at times people will sort of incorporate it and they don't know what to do with it, then they do everything over their personal name, and then if there's an issue with your tenants and stuff, it gets funny about like, well, you're saying you've got this general partner here, which is a liability protection, but you've been sending your rent straight to the personal account of whoever owns the LP, and that's where it creates some gaps in the liability coverage. Okay. So if you're sending money, let's say from a Canadian company, then you essentially have two choices about how to structure your investment. You can either do it as equity or as debt. I will say most of the time people go with equity because there are less rules, quite frankly. You can always do a return of capital on a tax-free basis. So let's say you move $1 million down as equity investment, then you move it back. There's no tax consequence to that. Loans have more fiddly rules. When you're doing cross-border lending, you're supposed to, for instance, have a loan agreement. You're supposed to have some sort of payment terms, some sort of an interest rate that is reflective of what that would normally look like if you were doing it with someone else. So like a hard money lend, for instance, would be like 12 to 18%, something like that. So they would kind of be expecting to see you doing the same thing. Otherwise, there can be negative tax consequences if you don't do it pretty well the same way you would do it with anybody else. And so sometimes that's good if someone's saying, well, I'd like to shift profit back to Canada, so I actually like the idea of charging interest, then it works out. But if you're not really wanting to do that, then it becomes really inconvenient to have to like make monthly payments. Let's say you were doing a BRRRR, that wouldn't be really convenient to try to saddle yourself with an obligation to like make monthly payments back to Canada.
You're at the risk of the dollar exchange then too. You don't get to pick the perfect time. You kind of have to do it every month.
Yeah, exactly. And if you make it too easy for yourself, the risk is that CRA says, no, this isn't the way two arm's length people would will deal with each other. So we're going to try to assess some sort of a tax benefit. So a lot of people do prefer the equity route. Although, like I said, if someone really does want, good basis for shifting more profit back to Canada to help manage certain issues, they can do that. The term that's oftentimes used is pertinent loan indebtedness, which basically just means you have to document everything very tightly. And, you can't have sort of loosey-goosey loans that you're kind of just like, you keep sending money down and you pay it back when you feel like it and this kind of stuff. That creates a lot of tax problems and doesn't really help manage issues like that FAPI issue that I've mentioned previously.
Yeah, no, that's actually the way you put it is you got to almost picture it like it is an external company or it's an external person. If someone's externally loaning you the money, and it would, we didn't really talk about this, but the same thing is if you had a management company out of Canada that's, collecting from the US, you'd want it to be a regular payment like you would if you're paying a property manager or a project manager or something. Like you're going to want it, to, what do you say, walk like a duck, quack like a duck, talk like a duck, So yep. Yeah, those are good. I think that's the easiest way to think about it is how would you do this if this is an external person? Did you know that there are more lending scams in the United States than anywhere else? I've actually come across many of them myself, and some of them are very good at looking legit. If you're interested in a list of lenders, please go to my website and get a list of verified lenders at CanadianInvestingInTheUSA.com/lenders.
Yeah, and you brought up a great point about management fees. You're allowed to charge intercompany management fees, cross-border management fees. These all, generally speaking, fall under CRA's transfer pricing rules. These are what these are known as. CRA actually has a couple of relatively clear memorandas on that subject, which are on the CRA website. And similar to what you said, the same way that to, let's say you had a big company and they had a Canadian branch and a US branch, the way they would kind of be expected to deal with each other, documentation, timesheets, receipts, regular billing. You have to actually pay the bills. You can't just sort of send your related company a bill for 500,000 and then never pay it because it sort of helped with the taxes or something, right?
Yeah.
That kind of stuff doesn't fly. But these are very powerful tax planning tools if you're going to be reasonable and consistent. We sort of don't wait to the end of the year and then pick the magic number kind of thing. It's like regular documentation, regular billing, timesheets. I almost say, like, you can almost think like an accountant, pretend you're going to have to send your client a bill and they're going to say, hey, show me the time that went into this, show me what you did, and that kind of stuff, as if you were going to be, any kind of consultant having to send someone a bill at the end and justify it. If you think that same way, you'll probably be compliant with those transfer pricing documentation rules.
Love it. Love it. Anyway, this is amazing tips. I think a lot of it, we talked about a lot of GP, LP, LLCs, limited partnerships, even C Corps were thrown in there, I believe, as well. So it could be a lot for some people to picture without actually seeing a graph sometimes, or a diagram to see what we're actually talking about. If this is something like, I'm happy to try to give some sort of at least a picture of what this kind of looks like for people who are interested. Or if people are looking to do like a consultation, they could do that and maybe go over that with you at that same time. Kris, if people wanted to book a consultation or they wanted to hire you for some of these services, how do they do that?
The easiest way to get in touch with our firm is go to our website, www.leapact. So that's leapact.ca. Fill out our web contact form and we'll be happy to get in touch with you.
Awesome. Like always, lots of information. It was a pleasure giving this call with you. I really appreciate it.
Thanks, Glenn.
That was a nice video.